they're very close. They're close to get to income from operations. And the biggest thing, a gap income from operations. This is key. Gap income from operations. What's good, everybody? This is Chat from the Bliss Life. I have been missing in action because I've been swamped at work, but today's video is a critical one. I'm finally going through the financials. I went through the financial statements already. I shot a super detailed video that took an hour long, and I realized I could probably do a condensed one in 15 minutes for those who really just want a quick summary. So that's what this video is going to be all about. And yeah, without wasting any more time, let's just get straight into it. Boom. Let me turn on the camera. So I realized I need to watch out for my face that's on the top right corner of the screen, but I'll make sure that everything I do, I will still be able to show you the numbers, and my face is not in the way because that would be stupid. All right, so first things first, let's go to the balance sheet. Cash balance still rocking the 2.3 billion, which is great. The marketable securities 252 versus 234, so there's, you know, the marketable securities are going up, so I imagine they're spending more money, TBD. The other thing is, overall, when you look at the 2.3 billion versus the total liabilities of 900 million, you know that they have enough cash to pay off their total liabilities 2 times, so that's great. Customer deposits 161 to 232. Here they dropped from 33 to 22, so it's overall growth, right? It's an overall growth of 60 million, let's say, because we have about 199 or 190 here versus 250, so they have a 60 million growth in customer deposits, which is very good. It's very telling that people are putting their hard-earned money into Palantir's hands, trying to get that spot to get the foundry services. So that is great, and that is a good sign, a good direction. Customer deposits going up is always good. And another thing to note here is AR. The timing of AR, last year they had 190 million, now they have 256. So this obviously for cash flow purposes doesn't look too good, but it could be a timing thing. It's possible that they collected this $256 million like 3 days after the quarter end. But this is going to impact cash flow, so something to think about, because they have a $60 million gap here. So it's like, oh man, we're short 60 mil because we didn't collect on our AR, but that it will come in time. Revenues, I did pull out something on Excel. Forget all the drawings or whatever that I did. I can explain that to you in a bit, but revenues have been growing really well. Let me just delete this. Let me make this smaller so it all fits in. Okay, so revenues grew 31% year over year. The target was 30%. 31%. I am happy. That is great. It's doing well. They said they're gonna hit 30, 31. Okay, great. Some people said 34, 35, 40. I don't give a fuck. Management said 30. Let's stick to 30. It's possible that they will beat, but I will wait for them to beat. Instead of announcing to the universe it's going to be 35, 40, 45 or whatever. So management said 30, they're hitting 30. That's great. Gross margins, they're keeping it tight at 79%. The prior year, 78, 79. This is good. I want it to be better, of course. Here, spending. Sales and marketing went up 24 mil. R&D went down 10 mil. G&A went down 4 mil. Is this because of R&D? Is this because of SBC? Partially. I already know, but we'll get into the details later. Now, the big takeaway is loss from ops. In March 2021, loss from operations is $39 million. This is very good compared to where they were prior year at $114 million. They were losing $114 million. And if I look at Yahoo Finance, they were losing $64 million in the prior quarter of December. So this is getting good. It's getting better. We're getting closer. We're marching to profitability. And anyone who doesn't see this, is, in my books, someone who is refusing to see the trend. Now, and it's funny because I say that because I'm not following any trends right now. I'm just focusing on the financials that are in front of me. But obviously, I need to look at the trends from prior periods to see if anything is going bad. But so far, we got 114 last year. We got 69 million last quarter in December, 64 million last quarter. Now we're at 39. So the operating margins, the loss from operations is getting smaller and smaller. They're getting towards profitability. This is solid to me. This is great. And I did a little fun calculation here just to see 1.3 for next year. Okay, let's say they grow 1.3, the revenues. Margins still stay the same at 79. Here I'm using my judgment. I'm saying, okay, let's say operating the sales and marketing go by 5% because sales and marketing is generally a fixed cost. It's not really related to, it's not variable to revenues in nature. If it was, it would be sitting in cost of revenue. But R&D, I said, look, it was 98 last year, 88 now. I'm going to say, let's say 100 mil, no problem. G&A, last year it was 146, now it's at 142. I just said, let's say 150. Total expenses 418, 39 million loss from, not loss, but gain. It's a gain from operations or income from operations. So pretty close. They're close to get to income from operations. And the biggest thing, a gap income from operations. This is key. Gap income from operations. Already at positive income from operations if you adjust for all the SBC, but I don't give a fuck. I'm not gonna do that. Provisions, and then when we look at here, other income, they have a loss of 59 million. So this is SPACs. Okay, they lost a lot of money on SPACs last year, not so much. Lost 60 mil on SPACs. Even last quarter they were losing money on SPACs. They lost 64 million on SPACs. Oh, I realized I was covering the wrong number. Prior period the loss was 58 million. Operating loss 58. Before that in September 91, 146, 114. So the trend line is so good, very good, very good. I can't dispute this. So it's the SPACs that are really going to be holding Palantir back, and they still have $232 million in marketable securities on their books. So if that keeps fluctuating down, then these losses are going to continue. So that's that. Now let's go straight to the cash flow. In the cash flow, one thing I need you to remember, and this is where the experienced stand out from the inexperienced, because I've already seen some idiots tweet about this, and I just said, okay, you know, food for thought. But big takeaway here is, oh snap, cash from operating activities only 35 million. Last period it was 116. Oh my god, they're not generating cash. Chill. It's largely because of the AR. Like I said before, earlier on, their AR balance went up by 60 mil. It was like at 190 to 256. So, you know, they have to collect that cash. If they collect that cash, then then if they just collect that 60 million delta, you know, AR went from 190 to 250. If they collect that 60 mil, they would be at $100 million cash generated. If they collect the full 250, they'll be at 280. You know, that this is just balance sheet items. It's all about timing, and I'm sure certain government customers have very generous terms. So TBD, but I'm not worried about this not being collected. Now, I would be worried though if it was all from SPACs and the SPACs are almost on the brink of bankruptcy, but they're not, because they just went through their business combinations, almost all of them. So all of them are flush with cash. So I'm not too concerned. Okay, now purchases for financing for investing activities. Take a look. They spent 89 million buying more SPACs, but they sold. They sold a bundle, they sold a few, I don't know, but they sold and they took home 8.2 million on whatever they sold. So that's that. Nothing there. Shares were exercised, 27 mil. Great. Cash is still relatively the same after all that's said and done. Remaining performance obligations. Here, one thing to take a note of is they have $1.2 billion of runway that they know about that's been established, and they expect to earn 42% over the next 12 months. Assuming 42 is equal, you know, like it's equally earned, because we only have 9 months left, not 12 for the year. So if we do 9 over 12, that's 75% times 0.42, that gives us 31% times the 1.2 billion. We have 378 that we know that's going to happen. So 378 million, they know they're going to get because it's already booked. They know it's coming, plus the 446. That brings us to 824. Don't forget, last year's revenues were about 1.5 billion times 1.3. So they need to, Palantir, to hit their 30% growth year over year, they need to get to almost $2 billion. So 2 billion minus the 824 that we just saw, they have to find about 1.2 bill. So 1.2 billion in earnings they need to find. It needs to be big contracts, needs to be contracts that are being renewed, being booked. This is the biggest item that is scary for any investor. But the truth is, we still have 9 months left. So if we divide it by 3, that's about 400 million a quarter. Can they pull it off? Maybe yes. So yeah, maybe yes. I think definitely, because they're pulling in 446 right now. But that doesn't mean it's recurring or sustaining. It just means it's possible. It's plausible. I don't think it's impossible. So that's that. Now, if we go through fair value measurements, nothing there. Investments here, they tell us 750 million. They have 750 million dollars worth of contracts, commercial contracts, for the SPAC agreements that they have on the books. So they have about 250 million dollars of SPAC agreements on the books, and they have 750 million dollars worth of contracts for these SPAC agreements. Keep in mind, it's the value that you see on the books. It is fair value, it is not book value. If we look at book value of what they have, and this is my estimate that I've been have estimated many moons ago. I haven't looked at this file since what, 31st of March, but they have invested about 536. Oh no, 326. This is what we know. 326 is what we know was firm, and these were apparently closed. So all of this together should bring us to, bang, no, exclude that, exclude this, whatever, it's something like 530. Yeah, somewhere around there. I'll look into it. But so we know that they have a really good value. Even if it's 500 million, they have a 750 million dollars worth of deals. So that's very good. Very, very good deal making. They just have to survive. Most of these firms that they invested in, they said they invested 326. I recognize all of them. Starry Groups, I've never heard of them, but they have a $16 million investment. So many SPACs, so many investments to look into. I will eventually get into it. But now let's look at this. Accrued liabilities, not a lot of big movements here. Debt facility, they have a really good untapped debt facility where it would be the overnight refinancing rate plus 2% spread, or base rate plus 1%. That's super good. And they can hit up to 500 million. So that's very, very nice. Here they talk about the cloud contract. Great. Investment commitments. They said that they have an investment commitment of Rubicon for 35 mil. That can eventually be canceled, and their foundry contract can be canceled with them too if they don't go public. So Palantir is only dealing with people who go public, which is an interesting strategy. It's probably to get liquidity, because Palantir can sell at any time, whereas if they don't go public, then why the hell is Palantir wasting their time? Okay, now something happened. Something. Okay, I need to reload this because my screen kind of acted weird right now. Let me jump real quick. I'm losing tab. It's tab with myself. I'm losing tab. Notes. Okay, so we got to the notes. Let's go. Oh no, did I record myself with the thing? Hopefully I didn't. But yeah, so we just got into that, the debt. So that's that. Not a lot to add there. What's happening here? Nothing there. Some lawsuit discussions. Shareholder compensation. I mean, shareholders total shares outstanding went from 2027 to 2045. Nothing crazy. Options, again, they went to 172 now. Before, now they're at 141. Not a lot. SBC 193 to 149. Not a big change. They decreased, but it's not a big change. You notice here that SBC went down 20 mil almost, but before we saw that SBC, that the GNA went down 5. See, GNA went down 5 right here, but here they say they went down 20 in SBC. So that means even though they went down 20, they went back up 15 for other expenses. Revenue splits. You can see here that the weight between commercial and government is starting to increase. Before, government was carrying a lot of the revenues, but now it's almost commercial is almost catching up to government at 200 versus 241. So that's something to think about. Revenues by territory. Here they say the US is still 61%. United Kingdom is 11%. I think before we used to see France, but they don't pass the 10% mark here. So they're bunched up into the rest of the world, and the rest of the world is 28%. So US is growing very well, but I feel like there needs to be more traction on the European side and the rest of the world side. As you can see here, they had about 140, and now they're at 170. So it's a 30 million growth, but I'd like to see that grow in a lot more bigger way, especially with the VP of sales that was hired in Europe. I need to see these numbers go up in a stronger fashion. But obviously the salespeople need to get trained and all that good stuff. So that's pretty much it for the financials. No big red flags. I mean, the trend lines have been really good. If you look at revenues, 341, 375, 392, 432, 443. So the quarterly growth is very good. Here you see the operating losses, 114, 146, 91, 58, and now they're at 39. So everything is going in the right direction. The way I see it, it's all about the quarter by quarter results, actions. I don't care what analysts are calling for, not because I think analysts are idiots or I'm being pessimistic. I just think that analysts carry too much weight, and sometimes they can say whatever they want and people assume it's correct. But analysts have said a lot of great things about a lot of great companies, including weed stocks, and all of them are in the gutter right now. So I do not give any credibility to what analysts are saying. Nobody holds them accountable. Every day they're changing things. Every day they're changing their targets. So analysts can really just go fuck themselves. But for me, the biggest takeaway is reading the results and seeing if I feel funky about anything. And really, the only things that I really feel funky about is the SPAC investments. I don't like the fact that Palantir has made these SPAC investments that at ridiculous valuations. That's pretty much it. That's my concern. Like, why would you give so much money to a firm that only pulls in 1 million in revenues? That's fucking ridiculous to me. So that is without a doubt an issue. But at the same time, and I have to give credibility, I have to give them credit, Palantir only gives money to companies that are going public through a business combination, and those companies are going to be flush with lots of cash. So they will not burn through all of that cash overnight, and Palantir feels confident that they'll be able to recoup those investments through their foundry contract. And it's not Palantir buying itself its own revenues. No matter how many times anybody says that, it is not Palantir buying its own revenues. It is really Palantir investing in a firm. They got the shares in that firm, so if the firm does good, Palantir benefits. Then Palantir has a contract which all the shareholders of that firm have agreed to, and all of those shareholders' cash pays for the foundry contract. And in that pool of shareholders, Palantir is one of those shareholders. So it's not Palantir buying its own revenues. Palantir in many cases does not own more than 5% in any of these SPACs. They don't own more than 5%. I think the most was like 3%. So Palantir is not buying its own revenues. Palantir, it's the remaining shareholders that are paying for it through the SPAC. So that's something to think about. If someone else puts out a hit piece, always be mindful of that. Anyways, if you like what you hear, then, you know, hit the subscribe button, hit the like button. It means a lot. And I'll definitely put out some other videos. I'll be back on it soon. See you. Take care.